When Angela Merkel and Nicolas Sarkozy waved goodbye on the steps of the Élysée Palace on Monday, their smiles told a story of détente, a relief that at last, despite their many differences, they had a mutual vision for Europe. So the timing of Standard & Poor's announcement late on Monday evening couldn't have been worse, and it drew sharp criticism from within the EU.
This agreement that puts the Eurozone under surveillance doesn't take into account the latest Franco-German proposals. This week is important for the quality of the success of the agreement on Friday at the European summit. The rating of France and the others will depend a lot on that.
Standard & Poor's says it's just doing its job.
But it's not our role to give concrete advice. Our role is to analyze and name the risks and tell investors how we see the risks as early as we change our opinion. That's exactly what we have done.
But S&P's downgrade warning has ramped up the pressure. In Germany, the US Treasury Secretary Timothy Geithner was seen limbering up on Tuesday morning ahead of important meetings at the European Central Bank and with the German finance minister. It's obviously not just EU finance ministers who are sweating over the outcome of Friday's summit. And as the markets opened on Tuesday, the Far Eastern indices were the first to see red figures on the boards. The Nikkei and Hang Seng both down more than 1%.
Frankly, the market already lost confidence in the European Union's ability to resolve its own crisis. And we believe that the European Union will be stuck in recession for a prolonged period.
The Australian central bank shaved 0.25% off interest rates on Tuesday as concern over the EU affected confidence in global economies.
There is a lot riding on what is happening in Europe as we go through the rest of this week. All of us hope and pray that the Europeans get their act together, that they put down their decisions very clearly and outline a clear plan for implementation of those decisions.
Reaction on the European stock markets has been more measured, with shares down but by less than 1% and no major changes in bond yields. But make no mistake, sentiment is extremely nervous and a successful outcome on Friday is far from certain. Paul Brennan, Al Jazeera, London.